It's been pretty significant for the market since the beginning of the week. We've seen a wide range of traders.
Right. What they're saying is that this is responsible innovation. President Biden will sign this executive order today, calling for just that in the crypto industry.
Right. Bitcoin exists to keep track of a ledger of 21 million coins. That's what it exists to do. We're not trying to build functionality into it. Generally, with all of these good ideas, Apple's a good idea, iOS, Google, Facebook, Amazon, Bitcoin. What are they all? They're all dominant digital networks spreading to billions of people. Unstoppable. The entire world needs them. Nobody can stop them. Generally, only 2%, 2% of the people get it. 90% of the people reject it. They will continue. 95% will reject it. You can hold it right in front of their face. You can say, here it is. And their response will be, oh, well, we need to sell that and diversify. Even today, right? How many people, when Bitcoin hits 60,000, they're like, well, you got to sell it. Why do I got to sell it? You got to diversify. It's too risky. Knowing everything you know, it's still too risky. It's the same investors that would sell Apple stock in 2012 or Amazon stock in 2015 or Google stock in 2014. They would say, well, it's overvalued and it's too risky. Well, what are you going to buy with it? I'm going to buy conventional things.
Right.
Well, the conventional things are all going to zero, right? Why are you thinking that way? It's because they don't want to be criticized. I don't think it's easy for a government. I think that the next aggressive adopters will probably be investors. Maybe sovereign wealth funds will do it first. It's a lot easier decision for a sovereign wealth fund, because if you would own $1 billion of Apple stock or own $1 billion of Google or Facebook, then owning $1 billion of Bitcoin doesn't look that different to you. So I think that they'll move next. This is a network where the early adopters benefit at every single stage. The first city, right? You want to be a first city, issue $1 billion of bonds that pay 2% or 3% interest, buy $1 billion of Bitcoin that yields 20% or 15%, and it's like your citizens are getting paid $150 million a year forever. The first country to do it will be a screaming winner, right? It's a no-brainer, right? Especially if you had your own currency. So if you were a small country and you were able to print your currency, buy Bitcoin with the currency, right? The right play here would be, I, in essence, buy $10 billion worth of Bitcoin and I announce it, right? And it goes up by a factor of 10 and I make $100 billion, right? If you were a country with exports, right? If you were an oil exporter, if you start to price your oil in Bitcoin and you buy the Bitcoin and then you funnel your cash receipts, right, your cash earnings into Bitcoin, then you would be, in essence, plugging your economy into the Bitcoin economy, taking a Bitcoin standard.
Yeah.
And what you would do is you would back your currency with Bitcoin, which is a deflationary asset, and your currency would be just like my stock. Like my stock was $120 a share when I started this. And it's dramatically appreciated because of us adopting a Bitcoin standard. In fact, we actually issued $1 billion worth of equity converted into Bitcoin, right? So a country stock is its currency. So a country could easily issue $1 billion of its currency and buy Bitcoin. So why haven't they done it? Well, why did we do it? We did it because our view was the situation was hopeless if we didn't do it. So find me a mid-size or a small country that thinks their situation is hopeless, that's got a leader that has the power to do something, then you'll actually get your first serious Bitcoin adopter. The challenge with, say, El Salvador is they don't have their own currency. If on the other hand, if Turkey printed lira and bought $10 billion of Bitcoin, the lira would be backed by, the Bitcoin, and that's a different situation. So that could happen in the UAE, that could happen in Saudi Arabia, it could happen in any exporting country with a currency. But, the question is, governance of the country, like how many people are involved to make that decision. And it's like, and how bad do you want the money? And then how afraid are you, right? Like when we first bought Bitcoin, there were plenty of conventional people in the media and conventional investors that thought that was somehow, a character flaw, or we should be castigated or attacked for it. And rather than, even after we made billions for our shareholders, we never really got recognized. The only view was, you risked the shareholder money. Well, we made them billions and billions of dollars. The vote would be 95% against. Even
Really?
after it worked, 95% of the people would still not do it, knowing that it would work, because most people just live in a very conventional world where they are afraid of unconventional things. And so the conventional thing is you adopt U.S. treasuries and currency derivatives as your treasury asset. Let's just generalize it to any nation.
Right.
Could be Saudi Arabia, could be UAE, could be Russia, could be any exporter. When you price your exports in dollars, you're supporting the US dollar. When you price your export in CNY, you're supporting the Chinese currency. When you price your exports in your own currency, people have to buy your own currency.
Yeah.
So when you price your exports in Bitcoin, you'd be supporting the Bitcoin currency. But there are always political dynamics, politics involved. It's like, will there be a war? Will someone go to war with me if I try to do that? And if so, maybe I'm concerned about that. Or is there some other political reason? Maybe I'd like to price it in Bitcoin, but the Chinese won't sell to me unless I price it in CNY. So there'll be trade issues and political issues and military issues and dynamics. And I think that'll evolve over time. Bitcoin is the most secure, highest integrity thing that does exist that's man-made on this earth, right? It's the likelihood that Bitcoin gets corrupted is far less than the likelihood that Google, Apple, Amazon, Facebook, or your government or your building get corrupted. And the likelihood that it gets corrupted is less than every other crypto asset. And the way you know that is because all of the centralized software programs are controlled by development teams. Right. And of all the crypto assets, the most decentralized is Bitcoin, which means the development is decentralized and the deployment is decentralized. So how do you know it's got integrity? Well, you've got 13 years of history and 20,000 other crypto things have been launched and they've all failed against it. Right. They were all less secure than it. Right. The actual network is controlled by the nodes and they're distributed to tens of thousands of different machines. And so you would have to convince everybody in the Bitcoin community to implement defective code against their own interest. One of the strengths of Bitcoin is the ambition to do the least amount possible. Right? Bitcoin exists to keep track of a ledger of 21 million coins. That's what it exists to do. We're not trying to build functionality into it.